Hello, I'm Dr. Matthew Sim. How are you feeling today? I hope you're feeling vigorous. If you're feeling sad, go and take up again. Maybe curling, winter sport. It's very interesting. A bit slow though. Or plan on trip to Prague. Prague used to be called Czechoslovakia. Now it's called Czech Republic, I believe. I'm going to buy some Bohemian crystals there. It's a nice place and visit the old town. I'm sure you enjoy it. Yippee Saye. Okay, today I'd like to talk about an interesting book. I think investment is a long term learning process. There's one book by Vanguard founder John Bogle. It's called The Little Book of Common Sense Investing. Little Book of Common Sense Investing by Bogle, Bogle. I find it very interesting. If you don't have time to read it, just a few pointers. John Bogle said that the only way to beat the market portfolio is to depart from the market portfolio. What it means is that you should pick your own stocks, the winning stocks, if you want to beat the market. But then on the next page, John Bogle said that over the past 36 years, only 3 funds out of 355 funds, or less than 1%, have consistently distinguished themselves. What it means is it's very hard to beat the market. At the end of the day, John Bogle suggests that you buy an index-linked fund. Of course, he will recommend his Vanguard, and there are 2 funds he usually recommends. One is the S&P 500 VOO, V for Vietnam, O for Oregon, O for Oregon, or the Vanguard Total Market Fund, VTI, V for Vietnam, T for Texas, I for Indianapolis. And he mentioned that one of his customers, who was a hardworking farmer, invested a small sum of money over the years, just a small sum. In the end, landed up with $1 million US. But it's up to you whether you want to follow John Bogle or not. It may be a different scenario, different time. It's hard to say. But in the long term, you want to invest in a stock market that is relatively stable and consistent. I see you next time. Boom.